What's the long-term impact of tax reform? Hello, my name's John Convery, and welcome to this edition of Retire with Coffee. I'm delighted you've decided to take a few minutes and visit in with me. Now, we all know we've gotten sweeping tax reform that just occurred, largely bringing down corporate tax rates from 35% to 21%. But many of you watching me here today, you say, John, that's great. That really doesn't help me personally. I know. We do know, though, that companies like AT&T and Southwest have been paying out bonuses even to line item non-managerial workers. That's kind of a good thing. But what's the long-term impact of tax reform? Well, there's no way to know for sure, but the theory is, even though economists agree that the tax reform bill is going to increase the budget deficit potentially or cut revenues by $1.5 trillion over 10 years, the theory is that even though the tax revenue paid by any individual company may shrink, as the pie gets larger, more productivity, more successful businesses profiting, that the smaller percentage is going to make up the difference. Kind of like the idea of enlarging the pizza pie and everybody getting a smaller slice of a larger pizza can mean more tax revenues, right? But what does this mean to my clients, the people that I'm most passionate about educating and helping thrive in retirement, not just survive? Well, that's a great question. I work with folks at or near retirement in the red zone where they can't afford a loss, because they won't necessarily have the time to recover, and they want to make sure they have sustainable long-term income so that whether the markets go up or down, their cash flow will be wonderful. And think of this, if your cash flow is good, life is good. If your cash flow is constrained, not so much. So what are some of the things we can learn about the new tax law for American retirees or retiree hopefuls? Well, let's think about this. How about number one, realizing that if you're in a 401k and you have any money that was added after tax during any of your employment years, that there may be a boon opportunity for you to carve that out and do a direct rollover into an IRA. Let me explain. Recently, I had a client with NextEra Energy that had such a position. We checked with Fidelity Net Benefits and found out that he had about $40,000 in his 401k that was after-tax contributions, but the earnings were about another $80,000, so the total's $120,000. But that $80,000 will be taxable. Do you realize if he had preempted that, taken the $40,000 and rolled it over directly into a Roth IRA after 59 and a half, he's eligible to do that, that would have grown that 40 in the same investment strategy over the same timeline, would have grown to what? Would have grown to the 120, but the entire enchilada would be tax-free versus $80,000 subject to tax, which could cost him $20,000 in taxes. So here's the first tip with regards to tax reform is number one, what can you do to take advantage of an in-service distribution if you're over 59 and a half and roll money out so it may be tax-free forever? Mwah! That's a wonderful, wonderful thought, better than delicious, sumptuous pasta. The second thing might be something about taking advantage of certain corporate tax advantages. Let's say you're a retiree and you have a small business, but you never incorporate it, and you always treated it as C income, profit and loss tax at your ordinary rate. Well, we now know that an S corporate shareholder is going to get a deduction of 20% for any money they pay through their company to themselves individual. S corporations are what are called pass-through entities. Now, I'm not a CPA or an attorney, but check with yours. They can tell you what the distinction of the legal definition of an S corporation, as well as your accountant, CPA, can tell you the tax implications. But as a business owner, I'm going to share what I'm aware of for myself, that some of the income I get from my S corporation business is going to be taxed potentially at a lower rate than me personally. For those of you that have a consulting or a small business that you're enjoying working part-time, like a gentleman I sat next to at a local dining establishment the other day, he sells high-end yachts, but he doesn't do a lot of business anymore. He's 70, but he's got old-time customers that come back to him to sell a outrigger or an old Hatteras boat, basically look for him to be the broker. So he earns decent income, more or less in any given year, based on his yacht sales, or fishing boat sales. This was something that he and I were talking about last night. He was so uber excited because he estimates that's going to save him $3,000 to $5,000 a year in taxes operating through a S corporation versus the way he always did as an outside salesperson. So these are just a couple of ideas, folks, but if you're getting the thought, where I come from is the idea or the epiphany of ask a better quality of question. I'm a great question asker. That's what I want to do. I don't have all the answers, but I want to help provoke your thinking by asking a better quality of question. This is just two examples of persons who potentially are going to reap a harvest of retirement savings, not just left and earmarked for the big corporation good old boys, but for the American senior as well. So the idea is you want to lower your taxes, increase your cash flow, and whatever else you do, make sure that you're positioned to thrive in retirement, not just survive. Thank you for joining me for this Retire Coffee Break Week moment, and have a magnificent day. Bye now.